Basically, we are going to be going over how to mark up a chart, right? And so, the first thing I'd already kind of had some stuff marked out. So, but basically, a good thing to look at is let's just you scale out to the weekly first, right? So we're going to open up the weekly and we're going to mark out. I have it on a gray line, so you can't see the other gray line just because I have, this horizontal line was over it. But I'll just get rid of that for now, just so you guys can see a little bit better. And so right here we have the week high, we have the week low, right? So these are two very clear levels, two draws on liquidity. And so these are good to know, good to understand. Just because you kind of want to have a good idea of where we're going. And so this I would say it's a pretty bullish week. Um, and so now let us just break it down, right? And so this is just a little bit easier. All you do is, I mean, literally, we're gonna control to basically use the magnet, but then we can just throw a little ray up there. I mean, I'm absolutely fucking it up right now. But so you can just throw like a ray, you can throw a horizontal line, you can really throw whatever. I mean, honestly, a horizontal line is probably just a little bit easier because it'll just snap for you. But so you can just, do these two lines, right? So we have like now we have marked out. This is ugly now. Now this is pissing me off. Sorry, guys. I'm out here trying to change things up because I'm, recording for you guys. I'm trying to act cool. So yeah, so we have this, right? So now we have a daily low and a daily high, right? These are probably slightly not straight, but it's whatever. So you can write this out, whatever. But honestly, you just need to know. Make it a different color, right? So this could be the weekly, these could be the daily. So when you have these just levels of liquidity marked out, this just really helps to give you a target, right? Like because it really helps to know that, hey, look, today we've had a very bullish day today. And so when the market, retraces as it naturally does, it's nice because we can kind of target. It's like this gives us a target. It's like, hey, so the market has been attracted to this area multiple times. And I mean, we can kind of draw out that attraction a little bit. I mean, you can just it's we don't have a ton of price discovery up here, but we can at least infer that price hasn't gone any higher. It's rejected off this area. And so since we're in price discovery with this, it's very important to be able to know, like, in the daily and weekly, kind of just where we're going, right? And so if you want to break it down even more, we're just going to go down to this 4 hour here. And so I don't know if you guys can see. So you can still kind of see, I mean, I didn't do this super clean, just doing it quick. But you can now it starts to become even clearer the draws on liquidity, right? So like look at this, we had a double tap and then we had a reject, and now we're gathering liquidity, and we'll see, hey, we might move lower and we might just try and take out this. But it's essential to be able to mark these things out just to understand this, right? Like have a good idea of where the market's going, right? This is the lowest it's tapped today. This is the highest it went yesterday, right? It's just like you need to be able to understand good information. And so one other thing that I just wanted to talk about with kind of like markups is, I mean, I'm kind of looking for, I mean, I guess that's kind of a fair value gap. It's not really great. There's not a ton of amazing like fair value gaps like to show you guys right now. But honestly, you really need to understand that really all a fair value gap is in the grand scheme of things is just an imbalance. Like it's really a made up thing. It stands for imbalance, right? So 1, 2, 3, right? So we can see we had very strong bullish movement and it just created a gap, right? Like the market was moving so fast, if you will, up that there's a lag, right? And so as we know, the market always wants to basically reach equilibrium. And so, this is a place we can mark out as an imbalance for a price to return to, right? And so, as you can see, I mean, not every fair value gap, not every imbalance is going to get respected. As you can see, this one just got completely ran through. But, it still shows you it's just a good gauge of where price might be attracted to, right? And so now this even might, who knows, maybe we'll get a random tap into this liquidity here and it'll be like, oh, well, that's why, And so it's good to be able to just kind of have a decent comprehensive understanding of this, because you got to understand, like, markups aren't decorations, bro. Like these are guides for you, right? You need to be able to understand. So actually it's we can just see. So this is actually good learning because Asia just opened, it looks like. So we can just go to this 15-minute really quick. I just want to kind of see. So we have this previous day high, we have this weekly high, and honestly, even right here, I don't love having just two things here, right? So I'm just going to clear this out because I know, I mean, they're the same thing essentially. And I also have a ray here just from like, this was from a couple days ago. This was a drawn liquidity. But it just goes to show that when you have these markups, it just gives you an idea of what's going to happen when price enters this area, right? And it's just like, as you can see, it's just price rejected off of here when it entered this area, price rejected when it entered this area. So you got to be able to mark out these random little draws on liquidity. I hope this was like somewhat helpful. I didn't do a great job of explaining just because this is my first time trying to explain on the chart like as I'm doing things, so that always still just throw you a little bit. But I hope this just kind of explained. It's like this is just the start of how you want to read price action, right? Like how you want to dictate where the market goes. And so we have this big ass red candle, right? But look at we have an imbalance here. So we can infer it might not be right now, but we can infer that due to this lag, price is going to enter into this zone at some point, right? Like it could be right now, it could not be until it taps this liquidity. But it just goes to show these markups give you keys. They give you clues. They're just clues. You got to stack confluences and stack clues to get more confident in your trading, right? To get more confident in your execution, right? And you can also, you can almost, this is essentially like this is like a fair value gap too, right? Because look at the giant lag, right? Like, but this is just an opposite fair value gap, right? Like, so this is a bearish fair value gap. And so as we can see, is it going to get violated? As of right now, it hasn't gotten violated, right? It's respecting it. However, it already encroached. It went over the midpoint. Like essentially, you can just imagine the midpoint's kind of around here. Well, it just went over that. You know what I'm saying? So it gives you just good confluences of just being able to stack them. And so when we saw, hey, we didn't necessarily break out of this, that might be a good inference that we might trend up here, barely tap out or fail to tap out, and then now take this liquidity that we just marked out again. So it's like you just got to be able to stack these confluences in order to just to gather information and gather confidence. And so that's why it's important to do to just mark out your chart. You can mark it out in great ways. Like it doesn't have to be the most obvious glaring thing just screaming at you, right? It can be something as simple as that, right? And you just little boom, like that works because I know that that's the weak high, right? And it doesn't get in my way too much. And so it's very important to not let your chart just get crusty. Make sure you can freaking read it, bro. Like that's essential. Like and especially so me too. I like using top step levels, so they help as well with just marking out areas of liquidity. But honestly, bro, they're using the same types of freaking analysis that you'd be using. So the areas that you're going to mark out are probably the areas that they have marked out. Like they have the same data as you, brother. And so that's why it's essential to be able to know where you're going in your markups, just so you don't get overly confused.